Hello and welcome. I'm Tshepo Modiba, and this is Buy Africa, where we focus on investment opportunities across the continent. Tonight, our attention is still on East Africa, but this time we venture beyond Nairobi, focusing specifically on the banking sector in the region. Joining me to share his insights is Imara Securities analyst Dexter Mahachi. Dexter, I know the banking sector, particularly in Kenya, as one where the big theme is mobile banking. How is the region in general from a banking perspective?
I think basically from a banking perspective, the region has been doing quite well. Quite a few of the banks have been displaying very good growth over the past 5 years, particularly if you look at banks in Rwanda, like BOK, and also Stanbic in Uganda has been doing quite well, and NBM in Tanzania as well.
Is that really following particularly strong economic growth for the region?
It is. According to World Bank statistics, you'll find that the region as a whole has growth rates between 5 to about 7%,
Right.
ranging from about, for Stanbic, for instance, for Uganda, for instance, they're expecting a growth about 6% next year, and the same for Rwanda, and Tanzania is around about 7% or so, and Kenya is around 5% or so.
That sounds like
So
a perfect
it's
environment
pretty good growth across the board for most East African economies.
and we know that banking is really a leverage on the underlying economy.
Exactly. I think some of them had a bit of a wobble in 2013, particularly the banks in Uganda and Rwanda. Rwanda because of the withdrawal of donor support, and Uganda was because the economy wasn't doing so great. Agriculture had a bit of a poor year. But since then, we've seen quite decent growth from some of the institutions there.
If we start off with Uganda and drill down into that market, what's the banking penetration like there? Are a lot of people actually banking, or is there a similar picture to some of other African countries?
Well, if we look at the region as a whole, the leading country there is Kenya.
Right.
Banking penetration, about 42% of adults there have hold or have bank accounts, and it's followed by the continental East Africa is actually followed by Rwanda, which comes in at about 32% or so.
Okay.
And then Uganda is around about the 20% or so.
Wow.
It's a bit behind what Kenya what Kenya and Rwanda have been able to achieve.
So from a potential basis,
there is plenty of potential.
I'm a cup half full kind of guy, so
yeah.
It means lots of potential there.
Yeah, there is a lot of potential there. But in terms of what needs to be done in order to increase the financial inclusion and everything, there's quite a bit of work that needs to be put onto the ground.
Okay, let's delve into a stock there.
Sure.
I know we're going to talk about Stanbic Bank Uganda.
Yeah.
Your views on the bank?
I quite like the bank. It's the most dominant in Uganda. It has the widest branch network, 98 branches with about almost 200 ATMs and so forth. But it hasn't fully recovered from the problems it had in 2013. So at the moment we have it on reduce. We feel there's better value elsewhere in Kenya and in Rwanda and also in Tanzania as well, where people can place their money.
If we step back a little bit, this is majority owned by the Stanbic Bank Group.
Yes, it is.
So this is their exposure to the region.
Yes.
Okay.
Yes.
Now, in terms of the underlying banking operations, is it majority retail banking or?
It's primarily retail banking.
Okay.
So you'll find that the branch network matters a lot, and they've got the widest. So in terms of dominance, purely on dominance per se, they're pretty good. And the bank management, when I last had a conversation with them, was saying that they're looking at a loan growth about 10 to 15% during the course of 2014,
Right.
and going forward. So they're doing pretty okay. But in terms of recovery from the problems they had in 2013, they haven't quite gotten to where we'd like.
And what were those issues in 2013?
There were a lot of bad loans which hit them. This was because of the high interest rate. Interest rates in Uganda had shot had shot up to about 20% or even more. Or even more. This was because of high inflation. The Reserve Bank of Uganda had to increase interest rates in order to combat the inflation trend in that country, following a poor agricultural season, and that of course led to all the NPL problems that they have, and they had to write off quite a few loans that they have.
And we're still seeing legacy issues from
There's
that?
still legacy issues there, and it's building up, but it's building up slowly.
Okay. And from a potential basis going forward, would you anticipate that the penetration will increase and they'll benefit specifically from traditional banking, or is there likely to be an introduction of mobile banking into the country?
I think mobile banking should be the future for them, because if you really look at what the Kenyans have been able to achieve, and even what the Rwandans have been able to achieve through mobile banking, you can see that they might not have much of a choice. They need to basically increase the penetration of their mobile banking unit within the country, and that will allow them to grow at a much faster pace. There's also issues of using other innovations such as agency banking. It can also assist in terms of growing their books and growing the number of customers on their books as well.
And are these areas where the bank is actually focusing on, or are they still really focused on traditional banking?
From what I saw, the message is mixed there. They don't seem to particularly be going full out to go on the mobile banking stage. They are doing it, but not to the extent that we've seen other banks in, like Equity Bank in Kenya, for instance, pursue it, or even BOK in Rwanda.
Okay, so fairly lukewarm in terms of...
Fairly lukewarm, which is why...
The perception of the bank and valuations and all of that.
Yes, it's a decent bank. It's got good valuations and stuff. But when we looked at it, we felt that there was better value to be had elsewhere.
Okay. If we jump across and go to Rwanda, what's Rwanda doing right and wrong from a legislation perspective?
I think there's a lot of enabling, there's been a creation of an enabling environment by the authorities. They've reduced the amount of time it takes for people to open their businesses, and
this is
done
beyond
quite a lot.
Financial services.
This is beyond financial services. What it has translated into is there's been a lot of hype and excitement around doing business in Rwanda.
Yes.
And of course, the Rwandese themselves have benefited from this. If in particular, if we look at Bank of Kigali, it's been growing at a CAGR of about 27% in terms of its loans and advances for the past 7 years or so. Which is pretty impressive.
Yeah.
I mean, the ROEs are around about 20% and above.
Okay. If we touch on Bank of Kigali, is it a similar story, again, retail-focused bank, or do they have a bigger commercial side to the bank?
It's also got a retail focus. But what I like about Bank of Kigali is that they also they've got a retail focus along with they also have a commercial arm. But the main profit driver is their retail side. What we like about them is the fact that they haven't been shy to go full out in terms of their mobile banking units and so forth. And they've got a 32 to 33% share of the deposits in Rwanda. And from what we can tell, it's despite the problems that they faced in 2013, they've recovered pretty quickly. Their net profits as of the 9 months in September had gone up something like about 22% or so. Which is a pleasing number. Which is pretty good.
Yeah. So are we likely to see this continuation of growth? I guess economically the backing is there.
Yes.
A country that's growing particularly quickly. Mobile penetration's fairly low. And banking penetration's also fairly low. So potentially as the country ramps up, they'll benefit.
Most definitely. I think because they're a play on the economy, if we look at the forecast from the World Bank, for instance, they're looking at the economy growing at between 6 and 7% over the next 3 to 4 years. So potentially what that means for Bank of Kigali, because they're the most dominant bank in Rwanda, they're likely to benefit from all the developments that will be coming from there. The other issue is the fact that with all the integration that's happening in East Africa through the East African community and stuff, we're seeing the banking sector as one of the best places to actually put your money, because they're likely to benefit from all the from the increased trade flows between these countries and all the economic growth that's going to flow from there.
Okay, and from a monetary policy perspective, is there a supportive environment for this business to keep growing?
Sure, there really has been. If we look at it, the monetary policy is accommodative at the moment. They reduced interest rates from about 7% to about 6.5% during the course of last year, just in order to stir more private sector credit growth. That's what they were looking at, and it seems to be playing out quite well, judging from the results we've seen from the banking. From the banks in Rwanda. Okay,
and we touched a little bit when we were talking about Stanbic about non-performing loans and bad debts. What does that look like? What does that profile look like in Rwanda, and specifically with Bank of Kigali?
It's not as bad as it was before. It's the lower interest rates are going to help.
Of course, people can afford to pay a little bit.
Of course, that's definitely a major point there. But what we've seen is the NPLs have been hovering around 5% or so, and we're projecting. It's pretty decent for the type of environment and the risks involved in banking in that region. So but we're looking at it getting much better during the course of 2015 and unwinding a little bit more.
This sounds like a really good story. Is there any pressure from competitors? Are they likely to lose market share?
There are a few competitors, but I think they're so far ahead of the game in the country that it's going to be pretty hard for them to catch up. In terms of infrastructure, just plain infrastructure, they've got they don't have as many branches as Uganda, but bear in mind that Rwanda has a smaller population. They've got about 65 branches in the country, and well over 100 ATMs scattered around the country. But then their distribution networks also centers on the POS network, point of sale network, and so forth. And that is pretty much the biggest in Rwanda, and we're not seeing any competition coming through and taking them out anytime soon.
Okay, sounds like a really good story. What does that translate to in terms of valuations and numbers? Is this fully priced in?
It's not fully priced in. I think there's still a little bit more to be had. I mean, they're trading at around about 290 Rwandan francs, PE of about 9 times. Price to book of about 4 times, dividend yield of about 3.8 or so, and we still see quite a bit of value in Bank of Kigali.
Sounds good. Let's leave it there, Dexter.
Okay.
Thanks to my guest, Dexter Mahachi from Imara Securities. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepo or @CNBC Africa, and use the hashtag BuyAfrica to talk to us. For myself and the team, goodbye.